Hello, my name is Ray Franklin. I'm the Senior Commodity Analyst for Energy Professionals. Today's video is a summary of our February 3rd Energy Update, in which I will explain why the EIA's latest weekly storage report continues to support higher natural gas prices long-term, and why the latest short-term decline in natural gas pricing could be a good buying opportunity. Now, natural gas is the largest source of power for electricity generation. Therefore, their pricing is highly correlated, which is why we focus on natural gas in our reports. In our January 13th winter update, we said last year we finished the winter heating season with supplies nearly 700 billion cubic feet above the 5-year moving average, which is why prices declined to near their lowest level since 2000. The $1.52 low reached at the end of last year's winter heating season was only surpassed by the extraordinarily low of $1.44 that was reached at the height of the COVID pandemic. In our January 13th winter update, we also pointed out that demand is expected to outpace supplies for an extended period, which will support higher prices similar to what has happened since 2000. When prices were as low as they were in 2024, the average price was always higher long-term. Our premise demand is expected to outpace supply was confirmed by the EIA's latest weekly storage report, revealing supplies have declined from nearly 700 billion cubic feet above the 5-year moving average at the end of last year's winter heating season to 111 billion cubic feet below the 5-year moving average. The massive decline of 800 billion cubic feet over the last 10 months will likely continue to grow, due to surging domestic electricity demand to accommodate the explosion of data centers, electric vehicles needing to be connected to the grid, and exports expected to rise for the foreseeable future. But it is important to understand, periodically prices will decline, which will offer good buying opportunities. Now, mild weather over the last week has triggered a short-term natural gas decline, but the cool weather forecasted for this month could trigger the next increase in prices. In our last report, we said you should expect high volatility and the risk of higher prices will continue to increase, which is why we recommended anyone with agreements expiring within the next 18 months take advantage of short-term declines like the one we've had experienced over the last week to reserve natural gas and electricity to be available when their present agreements expire. Not every client's risk tolerance and hedging strategy are the same. The goal of our reports is to reveal your risk-reward opportunities, and we invite you to call one of our energy analysts to help plan a hedging strategy that would be appropriate for your situation. And until my next report, please take care.